Let me go to some slides to try to sort of give you examples of this really briefly in terms of what this looks like. Now I'm gonna on your screen you should see a scenario here where it talks about a sole proprietor, and we're going to talk for the most part about the liability. How are your assets protected? Because one of the questions I get quite frequently is, well, how does it work in real life? And so this example, scenario one, each one of these companies I call Big Sky. It's just for the name. That's the name of the company, Big Sky. And you're a sole proprietorship, and let's say you've got $1 million in assets there, and the circle at the bottom represents you, and that you've got $1 million. Your company has $1 million, and then you've got $1 million in your pocket. Well, let's say Jane Doe gets a $2 million judgment against you. Then, as you can see on the screen here, she goes after the company. The company's only got $1 million in assets in the company, but she's got a $2 million judgment against you or your company, and you've got $1 million in your pocket right now. Is she able to get the $1 million? The question I would ask is she able to get the $1 million from the company and then come and get the $1 million from you as well to get her total $2 million? Or is she limited to just the $1 million that's in the company? Now, what you can do on these, if you want to try to go ahead and guess, you can pause the video and then maybe guess the answer and then start back up, because I'm going to tell you the answer. But for this one, it's probably pretty obvious. Jane Doe will be able to get the $2 million of your personal assets that you have in your pocket, in addition to the $1 million that she has, that you have in the business. So she gets her whole $2 million for the judgment that she got. Let's look at scenario two. Again, we call this Big Sky Company, but instead of being a sole proprietor, this is a general partnership. And Jane Doe has that same $2 million judgment. And in this partnership, there are three partners. Each partner has $1 million in personal assets, and then the partnership itself has $1 million in it. And the question is, how much of the $2 million does Jane Doe get? Can she get the $1 million out of the partnership, and does she get the $1 million from all three of the partners there, or what can she get? Well, she can get that $1 million that's in the partnership, and then she would sue each one of the partners to get the other $1 million. Now, she can't get more than her fair share of it, but she can get up to $1 million from whoever she finds. Now, if she finds partner number one first, and then the other two have gone to the Bahamas somewhere and hiding out, then she gets her $1 million from the company, and she gets the $1 million from the one person that she found there. So she still gets her $2 million, and even though the other two have gone or have absconded. Now, the remedy for that is that partner would try to locate the other partners to try to recoup their money. But the big point is Jane Doe would get hers from whoever she found, because each person is individually, jointly, and severally liable for the whole judgment in that. You can't carve it up. You're jointly, everybody is liable for the whole thing if that were to happen. So that's why it's important to be aware of how you're protecting your personal assets. The next example is, let's say Big Sky is a corporation. Same $1 million of assets, same $2 million judgment. You've got the same three stockholders here with the company. And so what happens here is that Jane Doe sues and then goes after her $1 million. But then she also sues to try to get the $1 million from the other part, the stockholders there. And so the question I would ask you is, can she get her $2 million, the other additional $1 million from either of the stockholders? If she finds all three of them and sues them, can she recover her $2 million from them? So what's the answer? Well, the answer is no, she can't. This is an example of limited liability. The stockholders get to keep their $1 million that they've got in their pockets. Jane Doe is limited to just the $1 million in the corporation. And that's one of the big advantages of having that limited liability there, because she can't, unless there's something going on, and that's a whole different story in terms of being able to reach down or pierce the corporate veil to get assets of the stockholders. The general rule is she only walks away in that instance with just $1 million, even though she's got a $2 million judgment against the company. Now the fourth one is a limited liability partnership, and the protection is, well, the answer to this one is pretty much the same. It is the same. Those individual partners, those limited partners, their assets are, their liability is limited to what they put in the company. They are protected from Jane Doe just as she was, just like a corporation. They're protected. Now so for tax purposes, they would have gotten a lower tax rate, but as far as liability is concerned, Jane Doe can't get to any of those three limited partners that are listed on the sheet there. They're protected. Their personal assets are protected. And then finally, if Big Sky is an LLC, which we see a lot of companies, a lot of people using that model now, the LLC. And the individual owners of an LLC are called members. And so the same question is, can Jane Doe get the personal assets, which is their $1 million, from those members that are those persons that are members of the LLC? Or is she limited to just $1 million in assets that's in the business, the LLC itself? And the answer is Jane Doe, again, is limited to her $1 million in that situation. She can't get to your personal assets. Your personal assets are protected. And that's why it's so important for you to understand and know the differences and the need for having these corporations or these legal structures set up. And again, when you set them up, you have to set your corporation or your other legal entity up to run separately, totally separate from your personal finances. Even if you're a sole proprietor, even though you're exposed, you still want to have separate accounts for what you're doing in your business, so that you can keep your business receipts and all the business operations separate and apart from what goes on in your personal life. When you start to mix and mingle those, you're running into all kind of problems that you're going to have at some point in time. So it's important to understand those legal structures, and that's why we want to get into a little bit about this, because your judgment about the selection of one of these early on is as important as anything. So just remember that having good judgment is key and vital. Read the book of Proverbs, get those pearls of wisdom out of the book of Proverbs, and just be aware and be intentional about how you make decisions. And look at yourself. Step outside of yourself and understand and know what goes into the decisions that you make, because you want to be a person that's known for having good judgment in your business and business dealings with your employees, with your vendors, and everyone else that you deal with. So thank you for being here. Of course, we've got some separate training on the legal side of the business too that you'll have access to. So thank you for being here. We will see you on the next session, and you take care. Bye-bye.